Mitsui & Company, tracing its roots back to 1673 with a kimono shop in Japan, evolving through the powerful Zaibatsu conglomerate, facing dissolution post-World War II, and re-emerging as a major global Sogo Shosha, general trading company, with diverse operations worldwide. From its humble beginnings, Mitsui grew into one of Japan's largest conglomerates. Deeply involved in mining, banking, textiles, and eventually global energy, metals, and machinery trade, adapting continuously through centuries of economic and political change. Mitsui & Company, one of the major Japanese trading houses, or Sogo Shosha, has generally seen significant growth and fluctuations in operating income from 2013 to 2024-2025. Driven by diversified investments in energy, metals, machinery, chemicals, and lifestyle sectors. With strong recent years fueled by high commodity prices, especially in energy, metals, and strategic portfolio shifts, indicating substantial growth over that period despite market volatility. Mitsui & Co.'s revenue decline in fiscal 2017, ending March 2017, stemmed mainly from a rebound from an exceptionally strong prior year, with lower commodity prices, reduced production volumes in energy, and the absence of large asset sales impacting results, even as the company focused on stronger, commodity-resilient businesses after big impairment losses the year before, showing some market stabilization, while headline profits dipped. Mitsui's underlying performance, base profit, showed steady growth, with segments like lifestyle performing well. And they planned significant investments in new growth areas. Decreases were largely due to cyclical factors in energy and metals, not necessarily a fundamental collapse in their core business. Mitsui & Co., Limited. Balance sheet data from 2013 to 2025 shows Mitsui & Company consistently maintains robust balance sheets, growing assets and equity significantly over the years. Mitsui & Co.'s total assets likely fell in 2017 due to strategic asset sales, asset recycling, to focus on core businesses, coupled with ongoing effects of fluctuating commodity prices impacting resource-related assets, and potentially foreign exchange impacts. Despite efforts to build resilient operations and record gains from specific investments like Vale SA, asset sales and commodity volatility often reduce total assets while shifting towards higher value, more stable holdings. In essence, the drop in total assets reflected a deliberate strategy to streamline and strengthen the company by shedding less strategic assets, rather than a sign of overall business failure, which was addressed by focusing on core, resilient sectors. Mitsui & Company has shown strong and stable core operating cash flow, supporting significant investments in growth projects, like LNG, offshore wind, and robust shareholder returns through dividends and large share buybacks, demonstrating financial health despite some segment volatility. While specific quarters might see dips, e.g., due to asset sales ending, the overall trend and forecasts point to enhanced cash generation and robust financial management. Mitsui & Co.'s operating activities saw mixed results between 2019 and 2021, with significant boosts in mineral and metal resources, due to high commodity prices like iron ore, copper, and chemicals, along with a recovery in energy, LNG, oil, gas, and machinery, driving strong growth despite pandemic impacts, as highlighted by increased dividends, asset sales, and strategic investments paying off, leading to higher profits in those key areas. While the COVID-19 pandemic created challenges, like sluggish retail sales in some areas, as noted in another Mitsui Group company, Mitsui & Company. Capitalized on the shift to digital, green initiatives, and commodity price surges, it's consistently paid dividends from 2013 to 2025, with payments typically twice a year, June and December, and showed a strong history of increasing payouts, growing dividends annually and maintaining a progressive policy with payout ratios around 40%. Highlighting shareholder returns as a core focus for the trading giant. Also, it has been actively repurchasing its shares with significant buybacks announced and executed in 2024 and ongoing into 2025.